is Horizons Middle East and Africa, our top stories this morning. The French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government. The euro and French bond futures sliding lower. US President Joe Biden arrives in Angola later today, making good on a promise to visit the continent before his term ends. Plus, Stellantis CEO Carlos Tavares quits early over a strategy dispute. We'll look into headwinds facing the automaker. It's just gone 8 a.m. across the Emirates. It's 3 p.m. Monday afternoon here in Sydney. I'm Paul Allen, standing in for Jemima Besetchi. Let's take a look at how some of the key assets are tracking at the moment. We've got US futures currently a little bit in the red ahead of that market's return from the break for Thanksgiving. Keeping an eye on Japan bonds as well. We've seen the two-year yield rising. It's now at its highest level since 2008. And of course, we have heard from BOJ Governor Ueda talking about the chances of tightening. The interest rate rise is nearing, he says. Swaps now pricing in a 67% chance of a December move, 90% in January. Take a look at the oil price as well. Brent crude just ticking up ever so slightly, up 0.5%. Of course, OPEC Plus did push back its weekend meeting to Thursday. All of those problems are still there, though. That decision on the production increase is still very much in the balance, as are, the security situation in the Middle East at the moment. But anyway, let's check in on how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril.
Yeah, Paul, as we see the resurgence in the US dollar that typically experiences a bit of softness in December, it's really starting the month on the front foot, and that's putting pressure on all Asia currencies, including the Japanese yen and the yuan, which is sliding to the weakest level since July. And this is despite data over the weekend and this morning showing a bit of stability returning to the Chinese economy. It's the factory activity indicators on the official and the private numbers that showed expansion for a second straight month. This follows on from months of contraction. The Tyson numbers were interesting because they were a lot better than expected, but may not be wise to read too much into this because you get the sense there was a bit of front loading ahead of Trump next year. And it's interesting to see on a day like this how Chinese equities have mostly pulled away from some of the earlier gains, even though they are clocking some green. Paul.
All right, Avril Hong there in Singapore. Thank you. Let's talk a bit more about the markets with Paul Gamble's co-founder and managing partner at MBMG Group. Paul, thanks so much for joining us. I just want to pick up on one of those points that Avril was making there about the China PMIs. An encouraging set of numbers there at first glance, but how much of this do you think is front-loading ahead of the incoming Trump administration?
Yeah, look, good morning. That's a great question. It seems like, we want to talk about Japan, we want to talk about China, we still end up talking about Trump somehow. I think that there's obviously an element. I think we're going to see more of that as we go into December as well, because the last chance saloon is rearing its head. But we're not going to see tariffs on the 20th of January, on the day that Trump takes over. It's going to be a process introducing them. So if there is front running, I think we could sort of overstate the effects of that if we're not careful. And I think that it's actually, if anything, it's kind of convenient timing. If we get 6 months of people front running exports, well, that's obviously going to create a bit of a temporal dislocation. It means that there will be a softer patch whenever that front running eventually comes to an end. But I think that's okay, because a lot of the stimulus that we've seen introduced by Chinese policymakers isn't necessarily just focused on fixing today, and that's why when you look at the numbers coming out of China, we do have such a discrepancy between, say, the Caixin, which is obviously contains a significant export element and a smaller companies element, and the official numbers. So I think this is actually, if there is any front running, I think it's actually buying time for some of the more structural aspects of the reforms and the stimulus that we've seen to take effect. So, I wouldn't be worried about it. I wouldn't discount the Chinese opportunity because of any concerns about an element of front running being involved in the Caixin blowout numbers that we've seen.
Yeah, I want to talk about opportunities more specifically in a moment, but in terms of the stimulus that we have seen, the market's been somewhat underwhelmed so far. Do you think there is a potential that once the Trump administration has its feet under the desk and things start to get real, we might see Chinese policymakers become a bit more enthusiastic about which buttons they're willing to push?
Yeah, look, I think that's exactly right. None of us know, what's going to happen between now and January 20th, and none of us know what's going to happen after January 20th, and that includes Chinese policymakers. So I think, they are keeping dry powder. But I think the other thing is, there's often disappointment in Western, capital market perceptions of Chinese stimulus, because in Western markets, we tend to look at them in a different way. We tend to assume stimulus is actually going to buoy asset prices. It's designed to help markets, and the Chinese view of stimulus is very much that it's meant to be much more integral than that. It's meant to be much more about the economy rather than the markets, and so the effects of Chinese stimulus will typically take longer to feed through anyway than sort of Western quick fixes. So I think there's a sort of cultural gap or misunderstanding of the intent and the impact of the stimulus from a lot of Western market observers, and I also think that there is a lot more to come, and particularly when the Chinese policymakers have got a better handle on what's going on. And again, we have to remember a lot of the Trump talk. One of the big differences I think between Trump and Biden is Trump says some of the craziest things, but it doesn't always follow. In fact, quite often doesn't follow through. Whereas Biden says crazy things and then often goes and does them, or says sensible things and then goes and does the opposite. So I think we've got to be careful about ascribing too much weight to Trump introducing some of the tariffs that he's actually threatening. I think a lot of that is just rhetoric.
Mm-hmm. Well, let's talk a little bit about opportunities in China, because it's certainly cheap at the moment if you're willing to jump in. And I know that you've got some enthusiasm around or an optimism around consumer plays. But if we take a look at this chart, we can see that China home sales again dropped after a brief rebound. And of course, confidence in the housing market is very closely tied to confidence from the consumer. Why is it that you're so optimistic about Chinese consumer plays?
I think that a lot of the stimulus focus that we have seen, and even more of what we're going to see, is going to be directed at consumption. And I think that there is going to be this divergence between broader consumption and the property market. There's a very clear intent to to cool the excesses of the property market. I think Chinese policymakers have taken heed of what happened in the States in 2007, 2008, when we saw subprime, and I think they're very conscious that they don't want to repeat those mistakes, and they're trying something that hasn't been tried in America, which is to reflate the consumer whilst keeping a lid on property. And that's a challenge, but it is going to create that divergence.
Paul, just before we let you go, I would like to get your views on some of the key currency moves we're seeing. We've got a much stronger US dollar today. The yen hanging in there, perhaps on those comments that we've heard from Governor Ueda about strengthening, hiking, I beg your pardon, getting very, very close now. Where do you see the next level of resistance for the yen?
So yen still looks ridiculously cheap. I mean, we said when we saw yen come back down to 140 that we thought we'd see 150 again. Well, we saw that we pushed towards 160. But I think 140 is a key level, 130 is a key level. We're still expecting to be sub 120 at some time in the next 12 to 18 months. So that makes yen ridiculously cheap. And as other currencies are shooting themselves in the foot, as other majors are shooting themselves in the foot. We see what's happening in France today. We see the Trump tweets about BRICS, which probably aren't good for the dollar long term. So with all of that stuff, the yen by default is becoming the most attractive looking currency left in the room.
All right, Paul Gambles, we're out of time, but thank you so much for joining us with your insights. Paul Gambles is co-founder and managing partner at MBMG Group. Up next, US President Joe Biden becomes the first sitting US president to visit Africa in almost a decade. We'll discuss his trip to Angola this week next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. US President Joe Biden will arrive in Angola later today, making good on his pledge to visit the African continent just weeks before leaving office. Biden will be the first sitting US president to visit Africa since 2015. For more, Bloomberg's Ondera Oganga joins us now. So, Ondera, what's on the agenda? What can we expect from President Biden's visit to Angola?
Good morning, Paul. So what we can expect is announcement of 12 deals that the U.S. has closed with Angola worth about $6.9 billion. They're also expected to announce new partnerships in terms of global health security in the wake of infectious diseases. President Biden is also expected to tout the role of U.S. companies in championing food security on the African continent. Key to this visit is the Lobito Corridor. This is touted as one of the U.S. mega infrastructure flagship projects on the African continent, and it's a 1,300-kilometer railway line linking the copper mines in DRC, the cobalt mines in DRC, and also some of the fields in Zambia to the port in Lobito in Angola. And this is to open up these minerals and make it easy to get them to international markets. You know, the U.S. is trying to counter Chinese dominance on the continent, particularly in terms of the copper and cobalt mines, because they're very key in the EV industry. They go a long way in producing smartphone batteries and also other parts in the technology sector. So that is what we're expecting President Biden to be focusing on. But also it's important to note that this visit comes at a time when President Biden is almost leaving office. And so there are questions here and there on what will be the U.S. policy on Africa moving forward. Trump, during his campaign, Africa did not majorly focus in the Make America Great Again agenda, and his re-election throws a spanner in the wheel.
Yes, considering President Biden's a lame duck president and he'll be gone in a few weeks, what weight does this visit carry on the continent?
Paul, to some extent, it carries a little bit of weight. It goes ahead to sort of solidify the pledges that he had made to the African continent. In 2022, he held the U.S. Africa Leaders Summit. $55 billion was pledged. Officials say about 80% of these pledges have been honored. You also have, during his administration, we've seen several visits from high-ranking state officials. Secretary of State Antony Blinken was on the continent. He visited West Africa in the wake of Islamic insurgencies, military coups, and also in the wake of things like growing Russian presence. We also saw Vice President Kamala Harris visit. And so his visit is almost like the cherry on top of the cake. But the question is, will they be able to counter Chinese dominance on the continent? China has invested nearly $26 billion in FDI receipts just last year. So the U.S. cannot outspend them and they cannot compete. They're offering a new way of partnering with Africa. In the wake of Africa crashing under the debt of China, the U.S. wants to offer alternative investment that is paced but good for the continent.
All right, Bloomberg's Ondera Oganga in Kigali for us. Thank you. Well, Stellantis CEO Carlos Tavares is quitting sooner than expected as the automaker grapples with slumping profit and weaker U.S. sales. The maker of Jeep SUVs and Fiat cars will be run by an interim committee headed by Chairman John Elkann. A new CEO will be named in the first half of next year. For more, Danny Lee, our transport reporter, joins us from Hong Kong. So, Danny, give us the details about exactly why Tavares is out.
Yeah, Stellantis board and Carlos Tavares disagreed on exactly how to address the weakening sales and the share price slump that has fallen 40% this year. And as you said, Tavares was meant to leave by early 2026 with an orderly transition to new management. But clearly the challenges for Stellantis has become increasingly fraught in recent months, capped off by a revision of sharply lower earnings outlook and under Tavares, management changes afoot constantly, and particularly more recently the CFO leaving. So they need fresh blood and a fresh pair of eyes, and clearly having new management to take the reins on and trying to turn around Stellantis will become even more urgent by next year.
So we've got VW and Nissan also facing challenges. What's happening there, and what's the common thread between the car makers?
So Volkswagen, today we're going to see potentially thousands, tens of thousands of workers in Germany walk out on the job. The union and Volkswagen has failed to come to an agreement on how to potentially cut jobs and cut costs. Volkswagen wants to close German factories, free German factories, cut tens of thousands of jobs and also cut pay, and the union is trying to resist that. So given the impact of potentially a walkout, this is the last thing that Volkswagen really needs, and to try and up the ante now on how to get an agreement before this becomes really financially damaging. The same for Nissan, also revising its outlook, cutting jobs and cutting output as well. It is potentially going to see its CFO leave, according to Bloomberg, who reported this at the weekend. So common thread between all of these really is challenging a difficult EV transition, weaker sales globally, and also trying to confront the rise of Chinese EV makers.
Just in terms of Tavares, he was a controversial person. How has his departure been received by investors, suppliers and employees as well?
I think the departure of Tavares can really be summed up by the US's main auto union, who was delighted that someone who they felt had trampled all over the workers' rights, squeezing suppliers. For Tavares, he was a very polarizing figure, and his playbook over the years of trying to continually cut costs, given his track record as a turnaround guru, this hasn't really worked for Stellantis, and therefore the distress it has caused amongst workers and suppliers alike, certainly some relief that has come from this news.
All right, Danny Lee, our transport reporter in Hong Kong. Thank you. Still to come, France's finance minister pushes back against far-right leader Marine Le Pen's budget demands. Our exclusive interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. French Finance Minister Antoine Armand tells us exclusively that the government will not accept artificial budget deadlines from far-right leader Marine Le Pen. And that's after Le Pen gave her strongest indications yet that she'll topple the administration as soon as this week.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
That's French Finance Minister Antoine Armand speaking exclusively with Bloomberg's Caroline Conan. Now, for a look at some of the other stories that we're following, Ireland is heading for a return of the coalition government led by the party of Prime Minister Simon Harris, Fine Gael, along with Fianna Fáil party. With 2/3 of the results announced, the two parties are on track to get more than 80 seats, meaning they'll need the support of a smaller party to get to the 88 needed for a majority. In Romania, the ruling Social Democrats are on course to win parliamentary elections. According to preliminary results, the incumbents have about 24% of the vote against about 18% for the far-right Alliance for the Unity of Romanians. The NATO member state was on edge a week after a fringe independent candidate secured a shock victory in the first round of the ballot. BlackRock is said to be nearing an agreement to buy HPS Investment Partners for about $12 billion. That's a purchase that would vault the world's biggest asset manager into the top ranks of private credit as it seeks to become a major force in alternative assets. Sources say BlackRock will pay for HPS with a mix of cash and stock. And cruise lines are shifting their focus from Europe to the Caribbean as companies face a growing backlash from locals and destinations like Barcelona, Venice and Dubrovnik. Stops in the Mediterranean declined for a third straight year in 2024, while Caribbean ports have so far seen a 16% increase in ship arrivals this year. All right, let's take a look at US equity futures as the US prepares to return after the Thanksgiving holiday. A little bit of softness in the market there. If we take a look at Euro stocks futures as well, we're expecting some declines there. And of course, we just heard that there is some consternation about the fate of the French budget. Got an oil price which is showing gains as OPEC pushes back its meeting to Thursday. More to come in a moment. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. The French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government. The euro and French bond futures slide lower. The greenback strengthens after Trump warns BRICS nations not to replace the US dollar, threatening 100% tariffs if they do. Plus, US President Biden signs a sweeping pardon for his son Hunter, reversing his previous stance on not using his executive powers to do so. It's just gone 8:30 a.m. Monday morning across the Emirates, 3:30 Monday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at how markets are tracking at the moment. Just mentioned the dollar there, and yes, we're seeing the dollar strengthen impressively off the back of some of that news flow. Of course, incoming President Trump issuing that threat against the BRICS countries. We've also got that interrupting the yen rally as well. The yen's had its best week since the carry trade unwinded back in early August. And of course, we've heard from Governor Ueda talking about how an interest rate rise is nearing in Japan. Swaps pricing in a 67% chance of a move in December, 90% in January. And we've seen yields rise on the Japanese 2-year as well. That's now at its highest since 2008. Well, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Paul, the story today is really about how geopolitics is playing out in the FX space and how the US dollar is back marching higher and reversing some of the softness from a week ago. It's certainly starting December with a sort of bang, and that is really what's playing out across currencies in the region today, despite some of these factors domestically, which typically would support local currencies. You think about Japan, you talked about how Ueda is saying a rate hike is nearing. We also got data out of Japan today that supports the view of such capital expenditure seeing a boost. And then you think about how China, second month of expansion on some of this factory activity indicator, whether you're looking at the official or the private numbers, although some have pointed out that a bit of this on the Tyson manufacturing is because of front loading by companies ahead of Trump, but it's an improvement nonetheless. Yet, look at the yuan, renminbi sliding to the weakest level since July against the greenback. So it's really a dollar story across Asia today. Paul.
All right, thanks, Avril. Avril Hong there in Singapore. Well, US President Joe Biden has signed a sweeping pardon for his son Hunter, reversing his previous stance that he would not use his executive powers to do so. President-elect Donald Trump, meanwhile, has appointed Massad Boulos as senior advisor on Arab and Middle Eastern affairs. Boulos is the father-in-law of his daughter Tiffany. For more on this, we're joined by Bloomberg's Jill Desis in Hong Kong. Jill, what are we to make of these latest appointments?
Yes, well, I think, that first development there, obviously, coming from outgoing President Joe Biden pardoning his son Hunter Biden on pretty much anything that was ultimately facing him, either those federal gun charges that he was convicted of already, also some potential charges awaiting him. Just want to start with that, pointing out that this is really a case where it marks a pretty stunning reversal from the White House, given that it was just up until very recently that the White House had said Joe Biden would not pardon his son. However, what Biden said in the statement was essentially that he thinks that the case against his son was politically motivated, that it was intended to break him and his son Hunter Biden. This is one thing that he said that he doesn't believe that his son would actually be facing this level of scrutiny, these kinds of charges, were it not for the fact that he is the son of the president. So I think pretty astounding turnaround from Joe Biden there. You've got that obviously against this broader backdrop of watching more for incoming President Donald Trump's transition team. Trump has, obviously, in the middle of all of these different things, Trump has really made going after Hunter Biden a cornerstone of his campaign. He spoke about it at length when he was running against Joe Biden, about 4 years ago. So that's been, I think, a really interesting development there to watch there when, Joe Biden really only has a few more weeks left in his term here.
Jill, I also want to talk a little bit about the Bloomberg Big Take, which discusses the roadmap through some of the potential dramas that we might see with some of the bold tariffs being promised by the incoming Trump administration. Can you walk us through some of the scenarios that have been gamed out?
Sure, of course. Well, I think that in the context, Paul, of all of these different appointments that Trump has been making, or nominations for Senate-confirmed positions that he's been making, the big question here is how exactly is this incoming administration, should a lot of them be confirmed, going to enact a lot of Trump's big policies, specifically some of these marquee tariff policies that he's instituted. Obviously, during the course of his campaign, Trump promised to, enact tariffs of upwards of 60% on China. Just in the past week, he's, offered this idea that he would have tariffs not just on China, but also on Canada and Mexico. That's all connected to a lot of what Trump says are his concerns about the fentanyl trade and border security. What Bloomberg Economics is really laying out in the Big Take today is that, to a certain extent, it is possible for Trump to enact these things, although bureaucracies being what they are, and a lot of these concerns about economics being what they are, it's likely that, BE sees this as taking place in three phases there. So you see this chart on your screen right now kind of taking you through those three different phases where you'd ultimately see tariffs on China of upward of 40%, triple where we're at now. So it is certainly possible, it seems, for Trump to enact tariffs in some form or another. Of course, what that would ultimately mean is that the amount of U.S. Goods and global trade certainly decreases somewhat. You do see some increased prices somewhere, but the way that Bloomberg Economics sees this is this could be a way to potentially pay for some of those pretty massive tax cuts that Trump either wants to renew or consider going forward. So this all kind of plays into a certain economic vision for Donald Trump if he were to get a lot of the appointments that he's trying to get into office, whether that be at Treasury, at Commerce, at the Trade Representative's office, sort of all in place going into his second term in office.
Tariffs, though, aren't always as simple as they seem. And if, for example, we consider car parts, they'll often crisscross a border a number of times on their way to actually becoming a car. What are the potential knock-on impacts of this? And is the administration perhaps pragmatic to walk back if things aren't working out the way that they were planned to?
Certainly, Paul. Well, look, as is the case with anything when you're dealing with these very complex supply chains, as you said, yes, Mexico, for example, has warned that if Trump were to enact some of the tariffs that he's promised just over the past week, that would have a really, really significant impacts on the U.S. autos trade and on those autos prices. And so that's just, one example of something that ultimately, could come back to the American consumer, depending on how some of these things go, depending on how exactly these tariffs get, specific and targeted. We saw a lot of this conversation unfold during Trump's first term in office. Certain, components that were either being sectioned off because of sanctions, whether that be from China or elsewhere, or tariffs that were in effect, and how that would, potentially trickle onto consumer goods. So all of that is a very, very messy part of the equation. I think the other thing to keep in mind here, though, Paul, is that it also kind of depends on some of the personalities that Trump is bringing into his administration. You've got Scott Bessent, who he wants to run, the Treasury Department here. Somebody seen on Wall Street as very pragmatic in the grand scheme of things. But at the same time, you've got some other picks that Trump has made across other departments that seem, much more sort of aggressive and boisterous in terms of really enforcing Trump's vision. I think at this point, for Trump, it's sort of balancing this desire to have people that are very loyal to him in office and that want to enact some of these really, really big swings, with also trying to placate markets. Because as we know, Trump really likes seeing, those, green lines go up in the stock market. So it's kind of balancing all of that together here.
All right, Bloomberg's Jill Desis in Hong Kong. Thank you. Let's bring in Rachel ZIEMBA. Rachel ZIEMBA, now founder of ZIEMBA Insights, which focuses on economic and political risk. Rachel, I imagine you're going to have plenty to do over the next 4 years. Let's start with some of the uncertainty that some of the policies of the incoming administration might have on the oil price, for example. How do you see tariffs impacting things on the demand side and this pledge to drill in the U.S. on the supply side? Where does the oil price find a way forward here?
Sure. I think in general, what Jill sort of laid out is an environment where if tariffs are steadily going up and costs are going up, that it's not great for demand, particularly as you'll see countries like China, for example, looking to come up with retaliatory tariffs. You bring up the important point, which is what's going to happen domestically, right? And I think the Trump administration is going to do what they can very quickly to reduce environmental regulations and regulatory reviews on things like natural gas and across the energy sector. But at the end of the day, whether companies drill is going to depend on their long-term oil price outlook. The natural gas one probably looks a little more bullish for more activity. A lot more is coming online. But U.S. producers, like their OPEC plus peers, are going to be facing this challenge of how strong demand is going to be in the coming years, right? We're seeing OPEC plus sit with record amounts of surplus capacity on the sidelines, and they're kicking the can to sort of try to avoid putting more supplies on the market for maybe at least one more month. I think this is an environment we won't see a lot of new U.S. oil and oil products coming on the market in the short term.
Yeah, OPEC Plus, of course, kicked the can on the weekend's meeting as well. It's happening on Thursday now, but all these questions are obviously still there. What's the challenge for OPEC Plus, though, in terms of maintaining discipline among its members in this environment?
Yeah, that's definitely growing. What we've seen in the last couple of months is OPEC Plus put pressure on the couple of countries that had really not been sticking to their targets: Kazakhstan, Iraq, even Russia, right? And in Russia's case, it was helped to meet its targets by the fact that Ukraine was using drones to attack its refineries. So not something that Russia particularly wanted to reduce production on. But, we have seen Kazakhstan in particular come closer to these compensation cuts. But, the thing that's looming is both a dynamic where a number of producers would like to bring back more in the market, but also a competition and tension between the UAE and Saudi Arabia, right? The UAE stands out as one of the few OPEC members that's been investing to increase its capacity in the last few years, and they've not been able to bring any of that to the market. And so one of the things we were looking for in the first quarter was for the UAE to be allowed to raise its quota. And I would imagine that that's on the agenda for MBS and MBZ in their meeting today, as well as celebrating the UAE National Day. So I think, Q1 is often a time of sluggish oil demand. Chinese demand is I think, going to continue to be a challenge. And so at a certain point, the market is really waiting to see whether OPEC just puts off and cast forward its current projections, or whether they look at 2025 in a more bearish stance.
Rachel, we're almost out of time, but I do quickly want to get your thoughts on the security situation in the Middle East, which remains in flux. The Israel-Hezbollah ceasefire seems to be holding, but the civil war in Syria is flaring up. Do you expect this to have any meaningful impact on oil prices?
I don't expect it will have a lot of material impact on oil prices. I'm really watching, what moves the oil markets tends to be concerns about major flows. So we can have a lot of lives lost and a lot of turmoil happening without there being major oil market impacts. But so what I'm really watching here is, what does this new front, in a sense, mean for Iran's role in the region? Does this make a Trump administration return to maximum pressure sanctions more likely? It probably does. Are they effective in doing so? The biggest risks to the oil market would be major outages that impact Saudi Arabia and GCC countries adding oil to the markets. That's sort of a extreme tail risk scenario. But in the biggest risks I see are of direct Iran-Israel attacks that could bring in regional tanker wars and the like. So, watching very much stability in the region is important, not only for the oil markets, but also for what countries in the region have to spend their money on, reconstruction and the like. And this all is coming at a time when countries like Saudi Arabia are trying to pivot and invest more at home. And so it would be easier to do so under peaceful conditions.
Rachel ZIEMBA, thank you for joining us. That is Rachel ZIEMBA, founder of ZIEMBA Insights in New York. Still to come, how President-elect Donald Trump's policy agenda complicates South Africa's mission at the G20 as the nation assumes the presidency of the bloc. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. South Africa officially takes over the helm of the G20, becoming the first African nation to lead the multilateral forum. President Cyril Ramaphosa wants to use his country's leadership to ease the plight of heavily indebted African nations, but Trump's proposed tariffs may complicate that mission. Bloomberg's Ntando Tukwanda joins us from Johannesburg now. So, Ntando, what's likely to be South Africa's key messages to the G20 during its presidency?
Good morning, Paul. So the key messaging that Ramaphosa has really been bringing forth is that he'll be really driving the message of greater global economic growth that is both inclusive and sustainable. And it's important to note that South Africa's presidency over the G20 is the first from an African nation, and he envisions it being Africa-focused, and he wants to bring the priorities of developments of the African continent and of the global South to the agenda of the G20. And a key issue there is the high indebtedness of African nations that have had to actually forego critical spending programs of their countries because they have such a huge bill for debt service costs. So that is one of the issues that Cyril Ramaphosa will want to bring to the fore. But that could be complicated by, President Donald Trump's likely tariffs or likely economic policies that could drive interest rates higher and the dollar higher, and just continue placing these African countries in a rotation of indebtedness.
So how tough is the task that lies ahead of President Cyril Ramaphosa in pushing the G20's agenda, given global political instability?
Well, South Africa assumes the G20 presidency in a moment that is both difficult but unique. He'll probably be put to task to manage, tensions between the U.S. and China in relation to tariffs and these economic policies that we don't know how they will shape up. But he will also have to manage peace talks and differing views, dissenting views regarding fighting in Gaza, as well as the invasion in Ukraine by Russia.
All right, Bloomberg's Ntando Tukwana in Johannesburg. Thank you. Coming up, Turkey's economy has entered a technical recession, fueling the case for rate cuts. We're live to Ankara next. This is Bloomberg.
When you have a crisis which is based partially on real estate, but more, I would say, exactly on oversupply, not only of real estate, but of many manufactured goods, which are too many to be absorbed, not only by the local Chinese living in China, but also internationally by Western consumers or Asian consumers. Obviously, this cannot be resolved overnight, because oversupply is also related to a certain infrastructure, to certain kind of investments which have to be reshifted towards different industries, probably more services and a bit less of traditional industry production. So we can anticipate that the crisis in China may continue next year, as the country will need, I think, a couple of years at least to absorb that oversupply of manufactured goods and real estate, and to evolve quickly towards an economy which is more a service-oriented economy, rather than an economy also much more in some advanced technologies, which they are already, but they can do for sure more, in order, to reestablish a balance between supply and demand, which today is challenging.
Jean-Christophe, are you then looking at opening more stores in mainland China in 2025, 2026? What's your expansion plan?
In Greater China, generally speaking, we have about 50 stores. So I would say it's quite a solid network covering the main cities, the main malls in rather good location, I have to say. So our first priority for this year and for next year is not necessarily, to open new stores, because I think that our network is so covering quite well mainland China. But to get more productivity from those stores on the one hand, and on the other hand, to further develop an area where we've been pioneering the market, that is e-commerce, not only the e-commerce we do from our website, but the e-commerce we do in concession with the likes of Tmall, with the likes of GD. And this is obviously reaching cities where we don't have stores and where we don't necessarily need to establish stores because they are not having the proper mall for luxury. On the other hand, they have the proper clients for luxury. And so obviously e-commerce is a smart way to reach those clients, to make them enjoy the Bulgari experience without necessarily having a boutique in each and every city of China above 5 million people.
The thing is, what kind of growth can be anticipated for markets like China in anticipation, for instance, of that Trump tariffs, which would weigh on the confidence of consumers?
You know, it's very difficult to project in the future what will be the politics of a newly elected president. Also because often between what you say to be elected and what you do once you're elected, there can be some differences. So assuming that import duties will increase, in America, probably the Chinese government will also increase duties from American goods. But I have to say that this shouldn't impact so much luxury in the sense that Chinese doesn't export much luxury to America. And I would say that America doesn't export much luxury to China.
That's Bulgari CEO Jean-Christophe Babin speaking exclusively with Insight anchor Haslinda Amin. Here's a look at some of the assets we're tracking as we head to the second hour of Horizons Middle East and Africa.
This is Horizons Middle East and Africa. Our top stories this morning. The French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government. The euro and French bond futures slide lower. US President Joe Biden arrives in Angola later today, making good on a promise to visit the continent before his term ends. Plus, the Stellantis CEO Carlos Tavares quits early over a strategy dispute. We'll look into the headwinds facing automakers. Well, a very good morning. It's just gone 9 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden in for Jemana Basecci. Welcome to the second hour of Horizons Middle East and Africa, and welcome to December. This is typically a pretty good month for stocks. You usually see a bit of a Santa rally. It's typically the third best month of the year, in fact, for equities. But you're looking at futures pointing lower, both in Europe and the US this morning. Flat on the FTSE 100 futures. And if we flip over to the cross-asset picture, you can see the Bloomberg Dollar Spot Index is higher. This is after comments from President-elect Donald Trump threatening tariffs of 100% on BRICS nations if they use their own new currency. We also have seen off the back of that weakness in euro dollar trading at a 105 handle currently, but also factor in there French Finance Minister Antoine Armand saying that France won't accept these artificial budget deadlines from Marine Le Pen. Of course, as I mentioned, we look ahead to oats trading, French bonds looking a little bit more like an emerging market bond at this point. The spread of German bonds widening to its highest level since 2012, and we'll factor in the various European PMI numbers when they come out later today. But on that dollar strength, you've got gold weaker. Keep an eye later on the Fed speak from Williams and Waller, and you've got Brent trading at $72 a barrel, so stronger 0.5% on the signs of a slow recovery in China's economy. And we'll get more on that in just a moment. Let's in fact go to Avril Hong now. She's on standby for us in Singapore with an update on how Asia markets are faring. Avril. Yeah, Lizzie, we're seeing Asia stock gauge at roughly the highest in about 3 weeks, and this is led by gains in the tech sector, tracking some of the similar moves on Wall Street last Friday, and there's a bit of relief there because US-China chip curve seems softer than expected. So it's a bit of a continuation from last week, but we are also keeping a close watch on some of these sectors, specifically in Japan, as we hear from the likes of the BOJ governor and how he's saying interest rates are nearing. That's typically typically something that is supportive for Japanese banks' profitability. So they're the ones among the sectors that are the top performers today. Despite that, we are seeing declines in the yen as well as the renminbi. And this is really a dollar story, which you just alluded to, those threat of tariffs by the president-elect in the US and his warning to those BRICS nations. That's even putting pressure on the yuan, and that's despite encouraging signs for China's factory activity. Lizzie?
All right, Avril Hong in Singapore, we thank you. Let's continue this markets conversation. We can join now Jun Bei Liu, who's portfolio manager at Tribeca Investment Partners. Good morning. Let's pick up on that currency story then. We've seen the dollar stronger against all its major peers off the back of these comments from President-elect Trump. I wonder how you see the euro faring as we head towards the end of 2025. Do you actually see euro-dollar parity?
Look, I do think the euro is going to remain weaker relative to the US dollars. I think it just a Trump presidency is going to put upward pressure on the US dollars, given some of the policy stands, the tariff and others that he's been talking about, the flow-on effect on as well, on the long end yield. We expect the euro to be continue to be weak. Also partly because it gets that into that crossfire in terms of the trade, trade negotiation. At the same time, when the US, potentially long end interest rate is going to remain higher for longer. So it's that's going to be they're going to be put pressure on the euro dollar.
I wonder if you see that weakness, where you see it going before 2025 begins, and how you kind of weigh these factors. Of course, you've got the tariff story, but you've also got European weakness, and we might see more of that in the PMIs today.
Yeah, that's right. Look, we do think from equity market perspective, we actually think that the equity market fundamental itself is pretty strong. So, if you look at the US market, you look at around the world, fundamentally economic environment is not too bad. Even in terms of Eurospace, we do expect the activity to pick up somewhat with the rate cuts all happening around the world. I do think that will underpin for the next 12 months, for those cyclical sectors and economic activity to pick up. Meanwhile, I think the strength in the US dollar is going to impact quite a lot of areas. As the investor perspective, is that knowing fundamentally strong, and should there be any dip, it's buy the dip.
I mean, this is about that kind of time of the year where we start talking about the Santa rally. Where do you see the S&P 500 at the end of the year?
Yeah, I do think that the market is going to head higher. I know it didn't start on the positive day, but we did have a very, very strong year and strong month now heading into December. Look, I think at the moment we are seeing investor sentiment is reasonably positive. As we mentioned, the economic activity is reasonably strong. Also, we are in the middle of an important retail point, which is the Cyber Weekend is getting more and more traction for the retail, for the retail businesses as well as to get a gauge on consumer and smaller businesses. So, so far it seems it's doing pretty well, this calendar event. And so we do think that we will get more positivity heading into the sort of Christmas period, key shopping period. With a lot of cyclicals doing the heavy lifting, and the market should track higher on the back of a stronger confidence.
OK, that's interesting. So it'll continue into Q1, even as maybe that seasonality wears off. I also want to ask you about the French story, which is, of course, top of mind this morning. At what point does the market say France is just uninvestable?
Look, it is getting more and more challenging. I think, across different geographies, that when you look at the investment opportunities, investors clearly crowding into the low risk option, which is the US market. I do think the European Eurozone has been quite difficult for investors for some time. And now with some of the uncertainties on the horizon, I think that, the required adjusted rate of return is going to be higher for those markets. We do think, hence why there will be, stronger US dollars as well as the US market continuing its leadership.
I mean, you kind of have to wonder what's worse, a collapsed French government or one that, keeps giving concessions and stays in power with a growing fiscal hole.
Absolutely. Look, I think that's a challenge, right? So for investors, it's very difficult to actually assess it's almost a regulatory risk, the government premium that you need to, or government discount that you have to put on those markets. We know many corporates, when they do business in those markets, in France, but especially, many of them have been penalized by changes in some of those policies and tightened regulations and redistribution of some of their income. So, it's been difficult market, and I think many investors will rethink where they allocate their capital.
All right, Jun Bei Liu, Portfolio Manager at Tribeca Investment Partners. Good to talk to you this morning as we look towards the end of the year and the outlook for 2025. Coming up, Joe Biden is set to fulfill his pledge to visit Africa just weeks before leaving office. More on the US president's trip to Angola next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, the Stellantis CEO Carlos Tavares is quitting sooner than expected as the automaker grapples with slumping profit and weaker US sales. The maker of Jeep SUVs and Fiat cars will be run by an interim committee headed by the chairman, John Elkann. And we can get more now from our transport reporter, Danny Lee, who joins us from Hong Kong. Danny, just give us the details here about why exactly Tavares, the CEO, is out.
Yeah, the Stellantis board and Tavares can't come to an agreement on how to arrest slumping sales and a slumping share price, a share price that's fallen 40% this year. So Tavares is out, and this really comes as there's been many management changes under Tavares to try and stop this falling sales, particularly out of one of his biggest markets, the US. And so we had seen, for example, the CFO leave recently. And so more recently, on top of that, there has been warnings on the financial outlook, which they've had to revise because of the challenges with weaker sales. And so to see Tavares go, not too much of a surprise here. And, the urgency that now comes into place in order to find someone who can save Stellantis from this decline that it's facing, the systemic decline in its business.
I mean, of course, Stellantis isn't alone in struggling with weak demand. I think about the struggles at VW, the walkout that's going to start today at Volkswagen. When you're trying to find a common thread between the car makers, how do you think about it?
Yeah, I mean, first of all, the fact that Volkswagen, its workers, tens of thousands of workers potentially walking out in Germany. There's been clear disagreement between its union and the company on how to potentially cut costs and maybe not cut output and not cut jobs in the process. And so therefore, this walkout really symbolises the challenges and also the risk for Volkswagen trying to come to agreement and not hemorrhage more cash at the same time. Increasingly for Nissan, also facing similar challenges as well. But when you look at Nissan, Volkswagen, and also Stellantis, they're all facing weaker sales, this struggle to pivot to electric vehicles, and then also the risk from the Chinese car makers in China and abroad.
I enjoyed your piece about Nissan's woes continuing even 5 years after the departure of Carlos Ghosn. Thank you so much, Danny Lee, our transport reporter, with the latest on Stellantis there. Let's get back to Joe Biden's trip to Angola. The president has signed a sweeping pardon as well for his son Hunter, reversing his previous stance that he would not use his executive powers to do so. It comes as he arrives in Africa, honouring his pledge to visit the continent just weeks before leaving office. The trip will be Biden's only visit to Africa during his time as president, as he seeks to deepen the US commitment to the continent. On the ground, we can speak to Bloomberg's Jennifer Zabasajja. She is in Luanda in Angola. Jennifer, good to see you. I mean, we have this piece on the terminal from Andreas Kluth, our opinion columnist. He puts it well, if harshly. He says, greeting a lame duck from Washington is better than hosting no duck at all. I wonder what's on the agenda for the president's trip.
Yeah, Lizzie, that's an interesting point that you make, because when you talk to people here in Angola, there's a lot of excitement. Even when you get to the airport, you see a picture of the president, both presidents shaking their hands when they met just a few years ago. But yes, as you mentioned, this is highly anticipated. President Biden will be the first sitting U.S. president to visit the country of Angola. He's also the first sitting U.S. president to visit sub-Saharan Africa since 2015. So this is significant. And I think when you talk about what the purpose of this trip is, it is as much about the past as it is about the hopeful future, right? As you mentioned, he is a lame duck president, but still, we have seen this administration pledge over $55 billion to the continent. And they've told us that they've actually fulfilled about 80% of that. And Angola is a very important part of the U.S.'s continued push to be strategically partnered with the sub-Saharan African region. But of course, this is not just about partnerships and diplomacy. This is also economically, this is a symbol of what the strategy is for the U.S. And I mean that by saying the Lobito Corridor, which is a very critical railway line that connects Angola, Zambia, and also a few other countries through the Copper Belt. It is important for the future for EVs. And so President Biden and the Biden administration has talked about how the U.S. wants to get ahead of the need for critical minerals and invest into this railway line so that, in fact, there can be an option for the U.S. to be a partner in this for Angola. Now, for Angola, this could be very strategically important. They are very close, of course, with China. They are indebted to China, as we have known in the past. And so, you know, we've heard from President Lourenço that this is not an either-or. He has talked about how even with the next President-elect Trump, he will work with him because his focus, he says, is on creating stability and economic prosperity for the country. And so the U.S. is a strategic partner and is a massive player, of course, in the space.
OK, that's interesting, given that Trump never visited Africa, and we need not mention on air the word he used to refer to all these nations. But I wonder, in the case of the current president, Joe Biden, is the fact that he's pardoned his son going to overshadow this trip, Jan?
Well, the timing of it is quite interesting, Lizzie. I mean, we should also talk about the timing of this trip. This was supposed to happen a few months ago, and it was derailed because of hurricane response back in the U.S. Of course, it was clearly of importance as the president has just about, I think, 50 or so days left in office for him to fulfill that promise. And it seems like we potentially could get more and more final decisions by the president as he prepares to leave office. The interesting part about this pardoning is that just a few weeks ago, the White House and the president were saying that they were not going to make a certain action like this. Clearly, there was a decision or discussion amongst family members that this was something that he wanted to do just because of the unknowns that we could potentially see in the next administration. Now, President Biden is on the Air Force One, on his way over here to Angola. He did not take questions from reporters as he was boarding the flight, from our understanding. But we've heard a number of leaders speaking out about this. I'm sure you've seen social media, the likes of President-elect Trump, Rudy Giuliani, also President Biden, and a number of other people commenting on what this could potentially mean. But surely he'll get questions when he gets on the ground here. I can imagine, though, that the Angolan people are hoping that it doesn't overshadow what they believe is a very strategic relationship for this country, for sub-Saharan Africa, and for the people.
All right, Bloomberg's Jennifer Zabasaja on the ground for us in Luanda, Angola. We thank you. I look forward to your coverage of that trip over the coming days. Now, for a look at some of the other stories we're following this morning, early results from Namibia's elections show that the ruling party is on track to maintain its almost 35-year grip on power. So far, the candidate of the Southwest African People's Organisation has some 56% of the vote, with its nearest opponent on 18%. SWAPO had faced a backlash over high levels of unemployment, graft and inequality. In other news, Chad has cancelled an agreement that allows French troops to operate in the Central African nation, one of the few remaining countries that Western military forces have used to fight Islamist insurgents in the Sahel region. The announcement by Chad's military government follows decisions by the juntas of Mali, Niger and Burkina Faso to sever security ties with Western allies. Well, those are some of our top stories this morning. Coming up, France's finance minister pushes back against far-right leader Marine Le Pen's budget demands. We'll bring you our exclusive interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, the French Finance Minister Antoine Armand tells us exclusively that the government will not accept artificial budget deadlines from the far-right leader Marine Le Pen. That's after Le Pen gave her strongest indications yet that she'll topple the administration as soon as this week.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologist people who are willing to oppose to Marine Le Pen to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
So that was the French Finance Minister Antoine Armand speaking exclusively with Bloomberg's Caroline Gonin. Of course, on Friday we had S&P continuing its rating on French debt, keeping it on hold, something of a reprieve for Prime Minister Michel Barnier. But if you take a look at this chart, you can see French oats trading pretty much like an emerging market bond here. The spread against German bunds widening to its highest level since the 2012 debt crisis. Is it a red herring? How significant is this marker? Something that we continue to discuss with analysts. But you're looking at euro-dollar weaker. It's also a story of dollar strength. If we flip over to the cross-asset picture, you can see the Bloomberg Dollar Spot Index is stronger, 0.5%. It's meant gold's weaker on the dollar strength because you've had President-elect Donald Trump warning that BRICS nations shouldn't create their new currency, otherwise he's going to whack them with a 100% tariff. But you've seen Brent stronger as well on the signs of a slow recovery in China's economy. Futures, though, if we flip over, pointing weaker on both sides of the pond. S&P E-minis lower 0.2% and Euro Stoxx 50 futures weaker 0.8%. Coming up on the programme, South Africa officially takes over leadership at the G20. We'll discuss the key messages that the country wants to put across next. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. The French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government. The euro and French bond futures slide lower. The greenback strengthens after Trump warns BRICS nations not to replace the US dollar, threatening 100% tariffs if they do. Plus, US President Biden signs a sweeping pardon for his son Hunter, reversing his previous stance on not using his executive powers to do so. Well, a very good morning. It's just gone 9:30 a.m. across the Emirates, 5:30 a.m. in London. I'm Lizzie Burden in for Jumana Basecci. Welcome to Horizon's Middle East and Africa. Welcome to a new week and welcome to December. It's typically the third best month of the year for stocks. We usually get a bit of a Santa rally after the Thanksgiving holiday, but you're looking at futures pointing lower stateside as well as in Europe. FTSE 100 futures flat to the upside currently. But if we flip the board over to the cross-asset picture, as I say, Donald Trump has warned BRICS nations against creating a new currency. That has pushed the Bloomberg Dollar Spot Index higher 0.5%. That is translating into euro-dollar weakness. 105 is where we trade currently, but that's also a bit of a story about France. As I say, the finance minister saying he will not accept artificial budget deadlines from Marine Le Pen. Gold also weaker on dollar strength by 0.7%. We'll keep an eye later on the Fed speak from Williams and Waller. And you've got Brent trading at $72 a barrel, stronger, nearly 0.5% on signs of a slow recovery in China. Let's get more on that now with Avril Hong. She's on standby for us in Singapore. Avril, how are Asia markets doing?
Yeah, Asia stocks are seeing a bit of a bright spot today, but I thought I'd highlight what we're seeing in currencies. As you know, Lizzie, it's really a story of dollar strength, and that's putting pressure on all these Asia FX, including the yen. And in the past week, it's had quite a journey from roughly the 155 level about a week ago. The Japanese currency has strengthened to where it is now, and it's worth highlighting that traders have been upping their bets of a December move by the Bank of Japan from roughly 50-50 to about 60%. I think it went as high as 70% earlier in the swaps market. And this also got a further tailwind in terms of expectations from the BOJ governor, speaking in a Nikkei interview that was released over the weekend, saying that those interest rate hikes are nearing. So it's just adding to the case for the BOJ to hike, because we had hotter than expected Tokyo CPI data on Friday, capital expenditure today that came in strong. But it's worth highlighting what we're seeing in the yen. It's kind of getting its wings clipped against the backdrop of a really strong dollar. What is Trump's tariff threats going to mean for the domestic economies, but also its own economy, inflation, the Fed expectations as well? So this is what we're seeing in the Asia Pacific today, Lizzie.
All right, Avril Hong in Singapore, we thank you as always. And I want to zoom in now on Turkey, which entered a technical recession in the third quarter as industrial production plunged, giving more evidence to the central bank as it ponders whether to start cutting rates next month. The $1.3 trillion economy shrank by 0.2% quarter on quarter, which is the second consecutive decline. We can speak now to Selva Demiralp, who's Professor of Economics at Koç University. She joins us now. Good morning, Selva. I'm kind of scratching my head as to how this could happen. How can Turkey be both in technical recession and have inflation of 49%?
Yes, I think that is a question that we have to try to find answers to, because despite cumulative rate hikes of more than 40 percentage points, the growth data came at minus 0.2%. So there's a mild recession, that's true. However, the question that we have to address is, despite these rate hikes, how come we have insufficient progress in inflation and growth rate is not slowing down sufficiently? I think the answer has two dimensions. One is fiscal policy has been relatively accommodative, and the central bank has been kind of alone in its fight with inflation. So despite the tightening on the monetary side, fiscal policy has been providing generous spending. And the second issue, to me, that's more important because I'm a central banker by heart, is the weak central bank credibility and the fact that even though the current economic team and the current central bank is implementing correct policies, what they have inherited from the past, where before the general elections, when there was a new economic team and a new central bank, an old central bank, they had significant policy mistakes and tried to disinflate the economy by cutting interest rates. And as a result, Turkey had a runaway inflation which peaked 85.5%. So in this world, what we observe is that once the central bank credibility is weakened, even though you do a U-turn and try to implement the right policies, the past mistakes haunt you. And as a result, inflation expectations don't come down. When people expect more inflation in the future, despite signals that central bank is going to do the right things, people bring their demand forward, assuming that inflation rate is going to increase. As a result, when demand is strong, but we see in the growth data is a very mild decline despite high interest rates in the economy. So what we have to see, what we have to achieve is to regain confidence. Our research at Koç University, we do a survey to consumers, and as an answer to one question where people say, do you think central bank with its rate hikes is going to be successful in lowering inflation rate? 73% of the participants that represent Turkish population say no. And when there's no confidence, unfortunately, inflation expectations won't come down, and the central bank has to keep rates higher for longer.
Yeah. I mean, you touched on the fiscal side. Are we about to see a kind of pivot from President Erdogan when it comes to going back to pro-growth policies?
It looks like it, because after staying silent, remaining silent for a long time and not commenting on monetary policy, very recently Erdogan did mention that inflation is going to come down, and it will come down due to low interest rates because of his belief that interest rate is the cost of borrowing, and therefore by lowering interest rates, inflation is going to come down. Now, as orthodox economists, we also acknowledge that interest rate is the cost of borrowing. However, by cutting rates, you would trigger demand pressures and inflationary expectations, which would dominate and increase inflation in the end. However, to answer your question, yes, I do think that central bank is going to cut rates soon, despite the fact that inflation remains far above central bank's year-end targets, not for this year, but also next year. Like tomorrow, we will see inflation data for November. Right now, the inflation rate is 48.5%. And if the inflation numbers come along with consistent with expectations, it's going to come down to 46%. However, the indicators, especially the data for Istanbul inflation, is around 3%, which is usually a good indicator for general inflation trends. If that happens, then central bank's time of a rate cut is going to, it will have a hard time justifying a rate cut because when the inflation rate is higher, even from the data, the target that you released last month, then clearly you are not on the right track to consider easings.
Yeah, well, indeed, the central bank sees 44% inflation at the end of the year. Our economists at Bloomberg Economics do see that December rate cut. We'll keep an eye out on it. But Selva Demiralp, Professor of Economics at Koç University, good to speak to you with your outlook for the economy there as well. Thank you. Now, South Africa has officially taken over the leadership of the G20, the first African nation to lead the multilateral forum. President Cyril Ramaphosa says he wants to use his country's presidency presidency to ease the plight of heavily indebted African nations, but Donald Trump's proposed tariffs may likely complicate his mission. Bloomberg's Ntando Tukwana joins us now from Johannesburg with more. Good morning. What is likely to be South Africa's key message to the G20 during this presidency?
Good morning, Lizzie. So as South Africa takes over the presidency of the G20, President Cyril Ramaphosa's overall messaging has been one of greater global economic growth, but one that is inclusive and sustainable. It's also the first time an African country is presiding over G20, and he wants to use this as an opportunity to take Africa's developmental priorities, as well as of the global South, to the agenda of the G20. And a critical issue is really addressing the high levels of debts facing African nations. A lot of African nations are really being crippled by a lot of debt, and they've actually had to forego spending, on productive areas of the economy, and instead they have these exorbitant debt servicing costs that they have to, or that they are faced with. Other issues that Cyril Ramaphosa would want to, bring to the forth are climate change issues and climate financing issues, as well as food insecurity. But we will get more details throughout the week and tomorrow as he officially launches, the country's takeover of the G20.
I mean, we've been talking about Trump's tariff threats. We know how much uncertainty hangs over 2025. How tough is the task that lies ahead of President Ramaphosa pushing this agenda for the G20 against that backdrop of global political instability?
Well, he definitely does have his work cut out. He takes over this presidency of the G20 at a time of wars and increasing trade protectionism. I mean, just this weekend, U.S. President-elect Donald Trump saying that he will slap, or threatening to slap BRICS nations with 100% tariffs. And, South Africa is part of that bloc, so there's that to manage. But there's also these growing tensions between the U.S. and China in terms of trade tariffs and, these likely economic policies that Donald Trump may try to push forward. We don't know how those are going to pan out, but certainly that is one area that he will have to watch closely for. But aside from the trade issues, there's also, peace and security issues that Cyril Ramaphosa will have to manage. He has to bring together member states who hold dissenting views around, issues like the fighting that's happening in Gaza, as well as Russia's Russia's invasion of Ukraine. Those are some of the issues that are going to, make this a very complex G20 presidency.
Certainly a difficult moment for that summit. Bloomberg's Ntando Tukwana in Johannesburg. We thank you, as always. Now, let's get to some of the other top stories that we're following for you this morning. Total Energies may greenlight a $750 million gas project in Nigeria next year, potentially signalling progress in the West African nation's efforts to revive hydrocarbon investment. Earlier this year, the French energy giant approved an investment in a joint venture with state-owned Nigerian National Petroleum Company to develop the Ubeta onshore field. In other news, Ireland is heading for the return of a coalition government led by the party of Prime Minister Simon Harris, Fine Gael, along with Fianna Fáil party as well. With 2/3 of the results announced, the two parties are on track to get more than 80 seats, meaning that they'll need the support of a smaller party to get to the 88 needed for a majority. And in Romania, the ruling Social Democrats are on course to win parliamentary elections there. According to preliminary results, the incumbents have about 24% of the vote, against about 18% for the far-right Alliance for the Unity of Romanians. The NATO member state was on edge a week after a fringe independent candidate secured a shock victory in the first round of the ballot. Well, those are some of our top stories this morning. Coming up on Horizons, the French finance minister tells Bloomberg that he will not accept artificial budget deadlines from the National Rally leader Marine Le Pen. We'll get more on that political turmoil live from Paris next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, the French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government. Take a listen.
The French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Now, the political standoff has led to market jitters, with the euro slipping and France's borrowing costs rising. We can get more now from Bloomberg's Caroline Conan, the lady behind that interview. Caroline, what else did the finance minister tell you about the concessions and how they're going to impact the deficit?
Clearly, in this interview, the goal of the French finance minister, Antoine Armand, was not to give extra concessions to Marine Le Pen. It was to reassure investors without looking like he's giving more concessions. In fact, the Prime Minister, Michel Barnier, has already given some concessions last week that are going to cost about 10 billion euros, including taxes on electricity. They were supposed to go up in this budget. They will not. In fact, prices of electricity will go down, and also the reduction of some social contributions of companies was supposed to be abandoned, and in fact Michel Barnier will keep those reductions for the lowest income. And even despite all this, Antoine Armand, the finance minister, told me he's actually sticking to the deficit target of 5% for next year.
What's my responsibility as a finance minister is to commit to the 5% target that we decided to have at the beginning of our mandate, not only for France or for the government, because it's now needed in order that Europe still remain a continent of prosperity.
Clearly, if the French political turmoil keeps pushing up French borrowing costs, that's also going to impact the debt burden of France. That's supposed to be around 50 billion euros for this year. Michel Barnier had a small reprieve on Friday night with Standard & Poor's actually maintaining the credit rating of France to AA-, which is 7 levels above junk. But we'll see, obviously, if the situation changes this week with a possible vote of no confidence.
Yeah, and as we know, markets are the guardrails on democracy. I wonder if you could just talk us through the choreography here. If there is going to be a no confidence vote, how would it play out?
Today, Lizzie, we're going to have a vote probably on the social security part of the budget. And if Michel Barnier thinks he's not going to pass it, then he's going to have to use a 49.3 article in the Constitution himself, provoking a no-confidence vote as soon as Wednesday. So it all depends on Marine Le Pen, whether she accepts the concessions already made. She said she wanted more on pensions, more on drug reimbursement. So that's all part of the security, social security budget. And then there's another deadline, which is probably towards the end of this week, on the finances of the year that's already passed, 2024. And even if Michel Barnier and his government manages to pass all these votes of no confidence and survives, then there will probably be another vote of no confidence on the overall budget just the week before Christmas. So that's how this is going to play out over the next few days. On Sunday morning, it seemed like Marine Le Pen was perhaps open to more debate, more compromise. But then on Sunday night, last night, she actually argued that the government had himself put an end to the discussions.
All right, Bloomberg's Caroline Conan in Paris. We thank you for that excellent interview and for the look ahead. It's going to be a busy week for you. As, of course, in the Middle East, we have Emmanuel Macron on his visit to Riyadh as well. But coming up on Horizons, Syria's largest city, Aleppo, has been seized by rebel forces as President al-Assad looks to his country's two biggest backers, Russia and Iran, for support. We'll get more on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, rebel forces have captured Aleppo, Syria's second largest city, over the weekend. Syria's President Bashar al-Assad reportedly flew to Moscow, despite concerns that he may not be able to rely on his two biggest backers, Russia and Iran, for support. Let's go now to Bloomberg's Sam Dagger for more. Sam, I thought the war in Syria was supposed to have ended 5 years ago. The country divided into four, and this seems to have come out of nowhere. How has this happened?
Yeah, not really. I mean, we just haven't been paying attention. I mean, obviously the conflict was sort of frozen, yes. I mean, the only reason Bashar al-Assad has been able to hold on to power is because he was being backed by Russia and Iran. Iran providing mainly, you know, the manpower on the ground, the forces, because his army had collapsed, you know, when he had faced a popular uprising in 2011, and that then morphed into a civil war. He hasn't been able to rebuild his army, so he was relying on Iran and its proxies, mainly Hezbollah and the militias from Iraq, as the manpower. And Russia obviously was providing the political support, and Russia has an air base, but Russia has been busy in Ukraine, and Iran obviously has sustained major blows from Israel, and Hezbollah's hands are now effectively tied in Lebanon.
So how much assistance can Russia actually give Assad now, given the war in Ukraine?
Well, I mean, I think at the moment, everybody, the Russians mainly, and maybe to some extent the Iranians, I mean, yesterday Iran's foreign minister himself flew to Damascus to meet with Bashar al-Assad, and he said the situation was very difficult. I mean, that's a direct quote from him. And obviously the Russians are watching this very closely. Mm-hmm. They did step in with some airstrikes, but very limited. I think what both Moscow and Tehran would be looking at this point is maybe some sort of negotiations with the rebels and the opposition, which are backed primarily by Turkey.
Yeah, I mean, interesting to see as well, Saudi trying to strengthen ties with both the US and Iran. Is it actually possible to hedge those bets, and especially when you've got Donald Trump coming into the White House?
Absolutely. I mean, when you talk to Saudi leaders and officials, they tell you this makes perfect sense because we are pursuing what they call Saudi first policy, foreign policy. They are basically looking at their alliances that serve their own strategic interests, primarily what's going to serve their major economic transformation project known as Vision 2030. So they're reaching out to, obviously, Iran. They had this rapprochement last year that was guaranteed by the Chinese. They're also obviously very interested in deepening their ties with their traditional ally, the United States.
All right, Sam Dagger, thank you, as always, for your insights on all these pretty tricky geopolitical tensions and relations. But that does it for Horizons Middle East and Africa. I've been Lizzie Burden in London. I hope you'll stick with us for Daybreak Europe. Tom Mackenzie's coming up next as we look at futures pointing lower. This is Bloomberg.